HUL is likely to announce their results today, and they are mostly flat. Whether it is revenue, a likely jump of only about 0.75%, net profits are likely to go down 2.5% year on year. EBITDA is likely to remain flat at 0.14%, according to market analysts. And this is largely because of higher advertising spends, royalty payouts to the parent Unilever PLC, and the expiration of the GSK deal that will that's likely to impact all the indices. Their businesses, whether it is home care, personal products, beauty and personal care products, home care products, or food and refreshment businesses, they are mostly flat, except for beauty and personal care, which has likely contributed a 2% jump over the year 2024. Input prices cooled off, and the company undertook price cuts to the tune of 2%, which resulted in volume growth of 2 and 3%. But we look at the stock over the last 1 year, it has gone down almost 10%. It is down today. What do you make of HUL? I'm sorry. Is it the FMCG pack that is suffering, or is HUL too big and basically its own weight is basically getting it down?
Amit, I think HUL, the FMCG pack per se is very hugely dependent on the rural economy. It's very hugely dependent on how the monsoons will be, how the rural consumption is picking up, how the rural demand is picking up, how the rural economy per se has been doing, right? And there has been a lot of chatter around that rural economy should pick up around the election season, possibly the impact of which we will see in the next quarter if that at all happens. And I think by all indications, it looks like that post the elections. Uh, from next quarter onwards, given that the monsoon estimate for this year is also fairly good, I think the rural economy should show some signs of improvement. Also, I think we are expecting that private sector capex will pick up, and that should also lead to some rural employment and other things, and which should lead to further augmenting rural growth. Having said which, I think HUL is going through its own set of challenges. The challenge from the unorganized market, the local brands, is more than increasing every day in the Indian context, right? Every day we figure out new brands which are, it's like the startup story on the financial side, where fintechs are disrupting the way how financial industry is working, and that story is playing out in the unorganized market in the FMCG side, where the unorganized local brands are trying and killing the bigger brands and bigger names. So the competition is stiffer than ever, and I think that is where the pedigree of HUL, the management, the brand, the long lasting vintage of the firm will perhaps come into play. But market is repricing the stock. Market is repricing from the average valuations of whatever 60, 65 or times, the stock is now down to 50 times multiples, or maybe a little lesser than that, right? And my sense is there'll be a base which market will come at around good quality stocks with good managements, brands which last till perpetuity, will always price very heavily. And my sense is the stock should settle down or should bottom down either by this result season or by next at the worst. And though we don't expect anything extraordinary coming out, but from there on it should become like a good value pick, not value in the sense that the valuations will be cheap, but compared to the historical averages and compared to the peer group, I think HUL will start looking attractive again within a quarter or so. And for patient investors, it's something to look at. For someone who's chasing aggressive growth and in Indian markets, who really want to play the markets very quick and fast, then I think this is not the stock to go for.